With the presidential election finished and growing possibility that Republicans could secure control of Congress, the market has begun to sort through the winners and losers. Our next guest cautions against significant shifts in your portfolio, but is keeping an eye on several key themes under the new administration. Joining us now is Paul Karger, TwinFocus co-founder and managing partner. Paul, it's great to see you. So listen, post-election, Paul, I'm curious, when you look at the markets right now, what do you think the signals the markets are sending us as investors?
Josh, great to be here. Post-election market response has really come through continued, animal spirits and risk assets. You've seen soaring mega cap stocks. You've seen rallying small caps, regional banks, financials, soaring Bitcoin, and other crypto-related assets. So it's risk on for now.
And is it risk on for everything, Paul, I guess, is part of the question. And should people be sort of reweighting their portfolios in terms of which sectors?
So I'll break that down. It's certainly not been risk on for everything. It's been a bit risk off for the more interest rate sensitive sectors, such as real estate, some healthcare, renewable energy. The Trump administration has been, as we know, focused around taxes and tariffs. So folks are starting to think through what kind of impact any kind of change in the tariff picture that will bring upon the markets. Certainly tax policy, immigration as well. Limiting immigration can be inflationary. And so the market has been concerned about inflation. You've seen the 10-year back up. In response to that potential. You've seen gold has continued to do well, and potential other inflation hedge here is, again, crypto.
Let me, Paul, in terms of other themes, I know you're watching the markets. Another one I want your take on is that mega AI trend. I'm curious what you're looking for there, Paul. There are certainly some analysts who are betting that a Trump administration is going to adopt a kind of more laissez-faire approach to AI.
We tend to agree with that. I think it's, AI coupled with technology. Tech has been really hot this year. AI has carried the markets this year. Maybe on a short-term basis, it feels like that might have gotten a bit ahead of itself. But absolutely, AI infrastructure. It's why we continue to like data centers, utilities, just simply not enough power out there today to fund and fuel AI.
And Paul, I know you're looking at some of the energy, some parts of the energy market as well. How are you approaching that? Because on the one hand, more production, opens up new areas for many of these companies. On the flip side, could put downward pressure on prices potentially if there's more production.
Yeah, I think it's going to be really a tale of two cities. A lot of this is going to have to do with what goes on with foreign policy. Lots of question around that. As we know, Trump is a different animal, and he's taken his approach to foreign policy by calling leaders and trying to sort things out. So there's a lot of question there. I was in Europe last week meeting with investors and clients, and still lots of concern about how Russia is able to interplay providing commodities to the rest of Western Europe. Obviously, here in the U.S., taking this protectionist bent, we've been really kind of patriotism. We've really kind of focused on this domestic energy production. So it's going to be really dependent on which region you're talking about. But by and large, we tend to be pretty bullish here, especially in an inflationary environment on commodities.
Paul, let me get you take a kind of a broader question. We could talk about this sort of near to intermediate term moves here. I'm just curious, Paul, did your sort of long-term strategic portfolio views, did those change because of this election?
Not really. That's a great question. Historically, elections have been really noise. And going into an election, I think you need to ensure that you've got proper portfolio diversification. Everybody's been focused on over concentrations to the U.S. Over the last decade plus has worked really, really well. We are urging clients to think about international diversification. But by and large, we're not making big swings in our asset allocation decisions based on the current results of the election.
A quick question on fixed income as well, because that's also one of the areas that is sort of up for grabs. Understanding that you're not making big changes, what are you watching most closely?
Sure. On the safer fixed income side, we have stayed closer on the curve, shorter on the curve, especially with our treasury allocations. There is some concern over municipals. We're not adding to our municipal exposures today. There's some concern that the taxability of those and the lack of taxability may go away. Jury's still out on that, so we're not looking to increase those exposures. High yield has done really well for us this year in a risk-on environment, but we are staying shorter duration with our fixed income.
Paul, thank you so much. Paul Karger, good to see you.
Great to be here. Thank you.
Thanks.